Okay, so anyway, welcome to Saturday webinar. What I was talking just now was there was an update during market hour yesterday where Donald Trump says he is Canada is like not really playing nice, and then he want to cut off all the US trade talk with Canada. So it kind of like put a wrench into the tariff situation with Canada. So that that actually kind of affect us in a major way, mainly because we have position on Alcoa, and then you can see Alcoa yesterday, it was doing relatively okay. I mean, it was down, but it was kind of like all right until like at some point during 1:45 a.m. like that, it just dropped all the way down. And this was during the time when this news was announced, lah. And of course, the reason being that Alcoa actually have a significant portion of their smelting facility in Canada. So if tariff are being imposed, right, then definitely there will be tariff on Alcoa's product. Okay, but nonetheless, even though we do have a very like a big drop, it is still bullish. I will still consider the trend to remain bullish. The uptrend is still intact. It did recover somewhat a bit towards the end of the trading session, and it simply just erased the game from Thursday lah. Okay, so if things don't escalate, we will continue to hold on to this position lah. Okay, so this is just a very rough update. So right now, S&P officially have closed at all-time high already. So we are definitely into all-time high territory already lah. Okay. So now, of course, over the past years, we hear a lot of recession warnings. Like there are a lot of guru calling recession in 2024, and then there were no recession. People start calling recession in 2025, the first half, and then now the first half is almost over, and then we have guru calling recession in 2025 second half, so the recession never came lah. Okay, and the thing is that there isn't any really catalyst for a recession, perhaps even for tariff related talk, right? There was some initial fear about tariff sort of throwing the entire economy into recession, but it does seems like Donald Trump is definitely aware of the recessionary risk, and I have mentioned this before a lot of time when tariff first came about, where I said that Donald Trump would not risk a global recession during his presidency. He is too egoistic for that. He want to be the guy that save America. So he's not gonna risk throwing America into recession now. Okay, he is indeed aware of some of the backlash or some of the repercussion that tariff may introduce into the economy lah. Okay, so definitely there are trade deals that is being worked out. So apparently over the weekend there are some trade deals that is being agreed with China, all this kind of stuff lah. Okay, so don't be too worry about recessionary risk for now. I guess right now the more important one is inflationary risk rather than recessionary risk. And of course, given the current interest rates right now, we definitely will expect the growth of US to sort of moderate a bit, lah. Okay. During the last FOMC, the SCP have guided US GDP slightly downward, so definitely we will be seeing a little bit of slower in growth. But nonetheless, overall, if you talk about economy, the job market, everything is still okay lah. It's still somewhat alright lah. Okay, we are not going for like a full-blown black swan kind of recessionary risk lah. Okay, so with that, also take note that next week we are going into July already, meaning to say a new earnings season is just on the horizon. And then we will have our new ISM report. We will have NFT on Friday. So more catalysts are coming in. Okay, so we have to prepare ourselves for a new earnings season really. Now, going into the portfolio, finally I am like in a very stable positive territory at $18,000 profit year to date, up about 6.1%. So now there were quite a number of positions that expire on 20th lah, okay? So 20th is the expiration for June option. So if you are holding any June related stuff, they have expired already lah. So now onto the open position, I currently have this and a total of 7 position, and among the 7 position, not all of them are active lah, okay? Some of them are hedging positions. So I'll go through some of them. Firstly, we have entered Microvast yesterday. So if you are not present for yesterday webinar, you definitely will have missed out this trade. But not to worry, don't need to FOMO. I will put up the trade setup on Monday so that you can actually enter on Monday lah. Okay, so Microvast is a company with they manufacture battery, and apparently they came out with a new battery technology. They patent ready. They got all the funding to secure the manufacturing, and just recently they went into profitability. They became profitable lah. Okay, scoring they managed to get 61.79 million for Q1 of 2025, and that is to say perhaps for the remainder of Q1 2025, we will see some positive earning coming in. Okay, so whenever a company goes from loss making, especially tech companies that are dealing with like some disruptive product, and when they finally go into profitability, right, they tend to rally quite aggressively lah. And not only that, there is a lot of room for Microvast to expand also lah. Okay, so originally it was like a penny stock like that, somewhere around like $1. Previously it was like 1 cent. Sorry, it was like 10 cent like that. But even at this level, right, I do think that we have a lot of room upwards lah. Okay, so Microvast, definitely our new long position that we'll be holding. Then we have Kavana. Kavana is a short position lah. Okay, so recently Kavana kind of rally back up again. So there was a big red candle, but then we have a big green candle that came in on Friday. So we shall see how it goes. Hopefully this is the new lower high, and then come next week it will go back down. Okay, but if this start to continue to go further up, right, then we may consider letting this trade go again. We shall see how lah. Okay, so this one monitor KIV. Next we have axometry. So this is basically our new big trade lah. Okay, new big trade. I personally have quite a big position on it. Currently it's up about $1,800, but we are looking for assignment. I definitely do want assignment, but it does seems like it is above $33, which is basically our strike price. So if it is not closing below 33, right, then chances of getting assignment is very, very low. But of course, if I am not getting assignment, then I will definitely welcome the credit lah. Okay, so the potential credit for axometry for me is about 20K like that. So there's a potential profit of 20K coming from axometry should I not get the assignment. But if I do get the assignment, then the profit is even higher, because if I'm getting assignment, I will get the credit. I'll definitely get the credit ready, but right after getting the credit, I can start selling cover call lah. So the profit potential is a lot lah. And of course, if I sell cover call at $40, then I will also get the capital gain from 33 to $40 should it go all the way up to $40 lah. Okay, so we have calculated the potential risk reward ratio, and it is quite phenomenal. So of course the question here is, what if we do not get assignment? If we do not get assignment, we just take the credit, and then we will definitely place another position on this again lah. Okay, because I do foresee this to go as high as $50 by year end lah. Okay, so we do have quite a lot of room to play. The only danger here is that it just go all the way down lah. Okay, so if it go all the way down, then you get assignment, but you also gonna stop loss lah. Okay, So it did kind of touch our stop loss for a little bit before it kind of recover, but hopefully it can continue to maintain this level and go up, okay? And if it does fall again, I hope that it can kind of hover between $30 and $33 lah. So we can get the assignment, but we also don't kena the stop loss. But if we get the assignment here, and if we play a cover call, then the cover call can actually help us buffer a little bit more where we can set our stop loss much lower since the cover call have sort of mitigate further risk. But we see how to best manage this lah. Okay, there isn't a really like a concrete plan on what to do with this, mainly because we have to react based on how the stock is doing lah. Okay, because there's simply too many paths really, too many paths to consider, whether you get assignment, you don't get assignment. If you get assignment, what are you going to do next? Or you want to sell cover call, what if it hit the stop loss, are you going to exit, blah blah blah. So there's a lot of what I will call active risk management lah. Okay, if you are a shortcut trader that you just want like a rule that is given out to you, hit this card, hit that price TP, you just want this two set of rule, right? Then obviously you're not gonna go very far in your trading lah. So you do need a lot of active risk management, especially when you are doing a long short portfolio, because if the market is falling significantly because the overall market is weak, there is some negative catalyst coming in that is pushing the market down, and then axometry is dropping to like $29 or even $28, that will also mean that your short position should be making a lot of money, and that can give you rooms for certain actions. For example, you can continue to hold on to axometry while you let your short position mitigate the risk, and at some point in time you can dollar cost average down at a lower price, and then your overall position for axometry will be your average buying cost for axometry will be much lower. But that is of course provided that the fundamentals are still intact lah. If the fundamental have drifted already, or if the current macroeconomic situation is not really good for tech, then of course we may have to let it go instead of letting axometry eat into the profit that our short position are making. So as a long short portfolio manager, right, there's a lot more variable that you need to consider. So as trader, we cannot simply just have one fixed rule a stop loss and a TP price for every single position and think that alone is sufficient enough to be profitable lah. Okay, so if you are holding a cash secure put position like me, there's definitely a lot of active management that you need to be doing lah. Okay, so make sure you are always present looking at the market. Don't suddenly disappear, go on a long holiday, and then come back and realize, hey, how come axometry is at $24? Why am I losing so much money? Don't run into those kind of situation, okay? So next, Dropbox definitely still doing all right. Definitely bearish. It has created like two lower high already, and on Friday it kind of recovered a bit, but I mean I'm not really worried too much about it lah. Okay, I think this one still have a lot of room to go down, so we can slowly ride this downwards. In fact, my Dropbox position is much higher. It's not 2,000 share. It's actually very close to 5,000 share, because along the way I have added more position, but I don't really know what is my average price is, because as I add position, right, the average buying price actually shifted lah. So until I calculated what is my average buying price, I will put this at $2,000 lah. Okay, 2,000 shares, but definitely the lot sizing is much higher. And then we have VIX with basically a hedging position. It's a insurance policy for this year lah. Okay, it's expiring in December. So if any nonsensical stuff were to happen, VIX will protect us. And then we have Alcoa. So Alcoa I have gone through already. So I'm not really that panicky yet. I think this one we can just let it B, we still have earnings that we can consider in order to push the price up. So we'll just hold until earnings. And then lastly, I have the S&P 500 futures. So you can see, of course, with S&P 500 going all-time high, my futures is making some amount of money lah. Okay, so this is basically my background data, meaning to say this is what I will be earning if I put my entire portfolio into S&P 500 lah. Okay, so this is the amount that I'll be earning right now if my entire my entire uh, um uh capital is in S&P 500. So definitely this is a leverage position lah. Okay, the amount of exposure I have is equivalent to my total capital. So it act as a market exposure where I will not lose out to anybody who is simply just dollar cost averaging the market. I will gain from this position now. Okay, so anything else that I am earning, I'll consider additional profit that is on top of the market, which is the alpha lah. Okay, alpha gain. So this is the beta gain. Whatever happening here is the alpha gain. Okay, so definitely the portfolio here is very bullish. There's a lot more bullish position than bearish position. So we do need some short position to sort of put our portfolio into a much more neutral state lah. Okay, even though everything is like very bullish, market is at all-time high, we cannot get too overconfident or get too overly bullish. Also we do need some form of hedging lah. Okay, so with that said, let's go into some possible trade that we can look at in the future. So firstly, I have mentioned Lululemon already. I'm personally not entering Lululemon, but if for some reason you are interested, you can definitely go for it. This will not be in like a trade setup lah, okay? Because I'm not gonna take this trade. But if you want to take it, you can put your stop loss around 210, and then your TP can be somewhere around 300 or 310 lah, okay? I think minimally it can close the gap here, but of course you see how you want to play lah, okay? So you can consider Lululemon long position. The other one is of course Microvast. We entered Microvast already, but I will be putting up an official trade setup on Monday for those who have not entered this yet. So aside from this, somebody asked about Dutch Bro, whether or not if I'm looking to enter Dutch Bro again. So if you have confidence in Dutch Bro, you can definitely enter again. But I'm actually moving on to Toast, and both Toast and Dutch Bro, they are in the same restaurant sector lah. Okay, but Toast is a little bit more of a service provider to the restaurant rather than being a restaurant themselves. But nonetheless, the performance of these two stock is still driven by how many people, by consumer spending in restaurant lah, consumer dining out lah. But the thing is, I feel that the growth in Toast is much more higher, and I'll probably be looking to enter Toast sometime in the future. Hopefully, when Xometry is being settled, either I get assignment or either I get the credit lah. Okay, either way lah. But right now, I need Xometry to be out of my portfolio before I can enter anything else because the margin requirement is actually quite high. So these are the two long positions that I'm looking at, and definitely, of course, some of the platinum stock that I mentioned previously. So on Friday, yesterday, we have platinum actually falling in price. So this is the reason why I don't really want to chase yet, because it is kind of in a overbought situation. Okay, so I do want to wait for it to like come back down, sort of consolidate a bit before moving back up again. So we will revisit this when the technical align. These are all the what -9? Oh, Palantir -9%. Holy crap! What happens here? I didn't notice this. But anyway, these are the potential long positions. So now onto short position, we have Dropbox and we have Kavana. So now, even though I have only three position here, my drop box lot sizing is very heavy. It's actually the size of three short position. So even though I here, if you just count the number of short position that I have, I only have like Kavana, Dropbox, and VIX. Dropbox alone is the lot sizing that I put for Dropbox alone. It is worth three position lah. Okay, so it's actually very big. But of course, I mean, normally I don't recommend this. You will be exposed to what I will call concentration risk, where if for some whatever reason Dropbox decide to suddenly rally because of I don't know like some takeover or they got new product or whatever lah, then you're definitely gonna lose a lot of money lah. Okay, so the only reason why I'm doing this is because firstly I do have very high conviction on Dropbox, but I can do that because I am the one that made the analysis. I'm the one that did the research. And if you are not the one that do the research, even if I'm telling you I have high conviction, your conviction level is not the same as mine because you will be sitting there and thinking, hey, what if Zor is wrong? Or hey, what if Zor analysis is wrong? Or worse yet, if you decide to just okay, whatever Zor say, confirm correct one, I will just blindly follow. That is even worse lah. Okay, so when I say I have conviction, right? Yes, it's because I know what to look out for, and if what if the reason why I am very confident on Dropbox is no longer valid, I will definitely get out. So on your end, right, if you decide to place a very big short position on Dropbox and suddenly the position go against you, right, you probably will not have the conviction to hold on. The moment you see a very big red position start to show up, you'll be like, oh shit, what is all is wrong? And then, oh my god, I'm gonna exit this. Then the next day, the stock actually dropped 10-20%, and then you are not there to take profit already. Okay. So my point is that if you are not the one that is making the analysis, it is very hard to follow what I will call a high conviction trade, where you can actually choose to play a slightly higher risk than what you would normally would. But from a follower perspective, I would suggest that you stick to your usual lot sizing. You stick to your usual 2% risk. If I'm personally taking about 5% risk, which is still considered small, I would say, but you may not be comfortable with a 5% risk. Okay, when you start to see big rate numbers start to show up. For those who can remember, at one point my S&P 500 was down. It was down by about $30,000, negative $30,000. But eventually it did recover back because of how the entire portfolio is being managed in a long short manner. So I don't really need to worry about that temporary rate in S&P 500 futures. And similarly for Dropbox also, if this kind of recovery occurs, right, you may be panicking, but I may not be panicking simply because first I have a higher conviction because I'm the one that did the research. And secondly, how my overall portfolio is being managed in a long short manner where yes, I have concentrated risk, but I'm also hedging this risk on the other end with some other position. Okay, so you truly need to be active, take an active role in your own trades. So, with that said, I don't really have another short position on hand except for one, which is TMC, the metal company. I have go through in length yesterday why I feel this one has a long way to go down, but I'm not gonna repeat that big long story lah, okay? But I do think this current level is a nice level to short really lah, okay? It has risen significantly high enough already, and I don't think they are gonna mine any rare earth material lah, okay? Dropbox is not option. We actually played stock position. Um, if you want option, because at that time, right, options were very expensive. I didn't really want to play option on Dropbox. So I just went for a normal short position instead. So I also foresee to hold Dropbox for very long. So instead of playing options where I get hit by time decay, right? I would rather play a stock short position and then I'll start selling cover put option in order to get some credit along the way. Okay, it is the short variation of covered call. Instead of a long position and selling a call option, we have a short position and selling a put option. So Dropbox is a stock position. Will you revisit data center like Credo or Marvel? Yes, I would definitely look to revisit, but only when there is I would say attractive price lah. Okay, I mean to be honest, I Axometry is like somewhat AI data center play also, but of course, I mean it is not as concentrated on data center as Credo or Marvel but we can definitely consider in the future if we manage to find something but we will not be looking back at the same name lah. Okay, Credo already moved so much already. Marvel maybe start moving only, but maybe even Astera Lab, we may consider Astera Lab again. We shall see how lah. Okay, but I don't really like playing back the same name, especially when they are rarely very very high already lah. Okay, so in summary, there are still quite a lot of long position on my watch list like Toast, Microvast, all these stocks. Even you can even consider Dutch Bro if you don't want Toast. On the short side, I'm looking at TMC lah. Okay, so I also think we can probably enter TMC on Monday also. So we will see how the stock is on Monday lah. Okay, guys, so that is all I have for this session. Thank you very much. And we are going into quarter three ready, July. And okay, so firstly, I'll also like to apologize in advance. July, I will still be I will still try my best to actively do all the webinars lah. Okay, but I'm getting married on 19th of July, so probably that week I may be a little bit busy lah. Okay, but definitely I will still be looking at the market, but I'll be a little bit busy with all the wedding preparation lah. But I will once the wedding is over is business as usual lah. Okay. So not to worry, I will definitely be around, but I may be a little bit more focused on the wedding week lah. Okay, but the rest of the week I'm here as usual. Okay, guys. Thank you very much. Thank you for all your wishes. So see you all next week as usual, same time, same place lah. Okay. Look out for the ISM. Look out for NFP. We see what we can do with those data coming in. Thank you. Have a good night. Have a good weekend.